Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Currencies have been moving in a range-bound fashion as data fails to trigger any moves. Rupee had an interesting set of moves yesterday with the USD INR pair falling below 83.30. Morning JK, what's your sense on the rupee? Do you think we may see some more appreciation or does it continue to be on a buy on dip strategy?
Yeah, good morning. So it's been hardly any triggers for the markets right now, and we're still seeing a range-bound movement. As far the rupee is concerned, I think just testing the downside, but we are seeing good bids from oil companies yesterday, supporting the market below 83.30, and don't think we'll move out of this range. In fact, there was a negative flow once again from FIS also yesterday, so which will lead to dollar buying. There was a small positive on Friday, but yesterday we saw again outflow. I think when we have such a big event ahead, we don't expect the rupee to move out of its range, and particularly when the central bank is, really vigilant and keeping a tab on the volatility. But if you look at the stock market, they don't seem to be so much concerned. So there is a divergence between the stock market and the rupee. Indian market cap topped 5 trillion. Well before the election results, and that clearly shows that the stock investors are not really worried. And we have joined the select band of countries like US, China, Japan, and Hong Kong, where we hit such a milestone. So that apart, overall, there has been very little trigger in the global markets as well, barring some minor data from Europe, and of course we had monetary policy decision from New Zealand. We kept the rates unchanged. What has happened after the CPI data is that dollar tried to break down, but that did not happen, sustain, because most of the policymakers or the Fed members who have spoken, and a host of them were there yesterday as well, and they were all speaking about Fed having to maintain the rate much longer, and inflation not really moving at the pace at which they would desire it to move down. These are things that are keeping the markets quiet. Rather, I would say the dollar quiet. Although the dollar has moved down against the commodities, I would put down this rally in the commodities to some sort of a diversification, both from the central banks as well as the large investors who have been overweight in the stocks and bonds, and perhaps that's the reason why their liquidity is being diverted towards other commodities, which have remained docile for quite some time. Gold and silver were in a big range for quite some time, and they have now broken out. One fallout of this rally in the commodities is that actually it can add to the inflation now. So that is something that we need to be mindful of. Although oil has remained on the lower side of the range. But again, there also you have to look at the upcoming meeting of OPEC in June. If they decide to maintain the lower output, then it can also have an upside. But overall, commodity prices going up is not good for the inflation in any country, and this is likely to add to the inflation. So overall, we are looking at monetary policies remaining on hold or at higher level, including countries like Europe, where one of the policymakers yesterday said that while they might move once on the policy downside, it won't be advisable for them to keep cutting rates because the inflation in the pipeline is still high. Therefore, I think this monetary policy evolution is keeping the currency market very quiet, and India, of course, waiting for the big event. So till then, at least till the end of this month, we should see the markets on a quieter side. So not much to look forward to today as well. A rangy market should be in place for the markets. Thank you.
Thank you, JK. And of course, range-bound markets make it a little boring for us, but for rupee, we saw good bids from oil companies. They were supporting the USD and are below 83.30. There was also some outflow by the FIIs. When it comes to Fed member speeches, I think the broad theme is higher for longer as inflation isn't budging. One thing to keep in mind is that the recent commodity rally, which we have been observing, that can add to the inflation. Even though oil has remained on the lower side, but if we see rally in copper, aluminum, and these other kind of commodities, it can add to inflation. And I think the monetary policy committees will be watchful for that. That's it from us today. We have a holiday tomorrow on account of Buddha Purnima. We'll see you all on Friday with the fresh round of updates. Thanks for listening.